Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the market continues to struggle actually. We are again seeing some selling pressure. We saw a bit of a pullback. ONGC is the stock that's seen quite a good rally in the last couple of months, but that as well as corrected. Remember it going towards 200 rupees just earlier this week. And that one, in fact, has seen a sharp correction. Hindalco as well, after the numbers look quite good, mind you. That as well has had a big run. So that's seeing some selling pressure. And ITC as well has moved to the low point of the day. I just want to ask the director to pull up the crisscross lines, because when we started trade, there were more number of stocks that were advancing in comparison to the number of stocks that were declining. Now, in fact, you have more than 1,100 stocks that are actually declining. So they've kissed each other, they've crossed each other. More number of stocks are declining now in comparison to those that are advancing. But let's get chatting with the management of ITD Cementation. Remember, the company is in focus after posting a rather good set of numbers. Mr. Prasad Patwardhan, the Chief Financial Officer of the company, joins in to take us through those numbers. Hi, Mr. Patwardhan. Thanks so much, sir, for joining in. Well, margins, that's the big positive in the last quarter at around 13%. Do you believe these margins are sustainable? And if you could give us a sense of what was the order inflow in the past quarter?
Well, in this quarter, the quarter ending September 2017, the order inflow was about 420 crores. As far as the margins are concerned, the EBITDA margins are about 13% in this quarter, and that is, the margins have slightly been aided because of some cost provisions, the credit for some cost provisions that we have taken in our P&L account. That is why you see the margins to be a bit higher. The other thing is the Ind AS, the new accounting standards that have kicked in this year. On some of the projects where we don't exercise control and we have a minority stake, we are only taking into account our share of the profit after tax on these contracts, and that is why you see a slightly higher profit EBITDA percentage. In absolute numbers, the reported numbers are good enough.
Mr. Patwardhan, good afternoon, sir. Just a moment. Look at the chart of Menon Bearings, actually. They're one of the suppliers to Bharat Forge. And I mean, of course, Bharat Forge has posted a good set of numbers, and Menon Bearings too. That stock is surging on the back of those numbers, which actually look like a top-down beat. So even the margins, if you pull them up, you'll see an expansion to nearly that 24-25% odd mark. But let's get back to ITD Cementation. Mr. Patwardhan, good afternoon, sir. Are you on track to cross the 1,000 crore mark in terms of order bookings? How have they been in the first half?
We are currently, our order book today is about 8,100, 8,200 crores.
10,000, sorry.
In addition to that, sorry?
I meant 10,000, not 1,000.
8,000. We are currently at 8,200. In addition to that, we are L1. We are the lowest bidder on orders for 2,100 crores. And these orders, one of them, a large one, is in the state of Tamil Nadu. The Udangudi power project, which is about 1,800, 1,900 crores, and there the decision on that placement of that order is expected by the end of December. So in case that materializes, we could see our order backlog crossing 10,000 crores within this calendar year.
All right. How is the metro project progressing, Mr. Patwardhan? If you could give us a sense of that.
Well, the metro project in Mumbai is on schedule. In fact, in the month of September, on 21st September, our first tunnel boring machine was lowered into the shaft in Mumbai, and it was inaugurated by our Honorary Chief Minister, Mr. Fadnavis. And we are one more. The second tunnel boring machine is also in place, and the drilling work is going to start now in this month itself.
Okay. Could you tell us what the current debt picture looks like?
Well, the gross debt on the books as of 30th September is about 530 crores.
Okay, and what
we have cash on hand. Yeah. We have cash on hand of about 200 crores. So the net debt is about 330 crores.
And give us a sense of the working capital situation, sir, as of now. And also, I think you had. You all were looking to raise some money via issue of shares and various other instruments, 350 crores approximately. If you could give us a sense of that.
Well, our working capital cycle is pretty healthy. If you see the receivable days, that would be around 45-50 days, and the work in progress also would be about 60 odd days. So the working capital cycle is between 80 to 90 days as far as we are concerned. In the month of September 2017, our board approved equity fundraising of about 350 crores, and we are working on that, and we hope to complete the process by December.
All right, so 350 crores you are looking to issue of shares, is it?
I think it got cut.
No, we're still with you, Mr. Patwardhan. The 350 crores that you were talking about, you're looking to raise that money, how? Okay, I think we have snapped that line actually. But anyways, management sounding reasonably confident. They lastly had indicated to us that on the revenue front, there may not be much growth. What he told us is that in fact, these 13% margins, it looked quite good in this quarter, not too sure about it holding going ahead. But the order book currently is more than 8,000 crores. And by the end of this year, it'll be more than close to around that 10,000 crores that they told us last time around as well.
Got the numbers for Page Industries, so we should just try and pull up those numbers. Yeah. Oh, it's looking good actually. Operational performance, I saw that EBITDA numbers were 128 crores over there.
That's in line.
It's just ahead, yeah, in line actually with what we were expecting. So do you have the rest of the numbers, Nigel?
Yeah, so actually I think the number that's flashing with the screen is that they're expecting...
626 looks good.
Yeah, they're expecting, we were working with the growth of around 19% approximately. I think it's come in higher by close to around 17 to around 18% approximately. The margin number, I think that should come up for you on the screen. Well, our EBITDA number was expected to grow by close to around 17%. I think it's come in a tad bit better. 2% beat is what we are seeing on that front. So the margins, the calculated margins should be a tad bit better. We were working with a mild compression of around 40 basis points. Guess what? There's a bit of an expansion, and that explains why, in fact, even the net profit number has come in a tad bit better than what we were working with. Well, it's a weakish day for the markets, but otherwise these numbers look good. They are in line, or they are a tad bit better than what the street was working with. Better, better than expected margin expansion. Operating profit grew more than what we expected, and top line more or less, in line with what we were working with. The net profit number as well beats our estimates by roughly around 5%, coming in at around 84 crores. We were working with 80 crores.
And this is a stock which has had a phenomenal run, so one wouldn't actually fault people for trying to take profits over here. The key to watch out for is the volume growth. So I've tried to go through what they have uploaded on the exchanges. They haven't given the volume figure as of now. So we'll try and see what it should be. I think between 7 to 8% is by and large what the street is expecting. So let's see what that number comes to, what the realizations have been. But in any case, I mean, Page Industries is actually the leader in their segment, and therefore they shouldn't have much of a problem over there. So those are two key things to watch out for. Other than that, as of now, the numbers looking good, and the stock just a tad bit off. But let's address some more numbers that came in. Pidilite posted a good set of numbers. The stock is higher, reacting to that. Apurva Parekh, the ED, now joins in. Mr. Parekh, good afternoon, sir, and congratulations on a good quarter. Could you tell us what was the domestic volume as well as the price breakup, and if you could specify whether it was in double digits or not?
So our standalone volume growth during this quarter was 12%. This was driven by around 15% volume and mix growth in consumer and bazaar products. Industrial product volume was flat.
All right, so so let's get back to the volume number for the first half. What was the normalized volume growth? What has it been?
See, the volume growth in the first half for consumer and bazaar product is around 6% for the first half of the year, and industrial product will have slight decline of volume.
Okay, so why was it that we saw some weakness in your industrial business?
So in industrial product, our domestic product sales volume has been okay. It has been 4-5%. However, our exports of industrial products have been impacted, and that has been due to two reasons. One is some timing difference on orders for some of our products, and second is due to increase in raw material prices. It has made it difficult to export some of our products. So that has had some impact during the first half of the current year.
Well, in that case, sir, can we see a recovery in both segments in the second half of the year? Is 10% volume growth on the cards by the end of FY18?
See, I would not like to, say that what would be the expected growth in the second half of the year, but we have seen a good quarter, part of the improvement is due to, improvement in the stock level at channel partner, and also we see some improvement in demand scenario. So we need to see how one or two next quarter go before, we can get a better idea of how the situation is.
Mr. Parekh, just hold that thought, sir. Apologies, but it's earnings season. Granules India also coming out with numbers. We don't have a poll for it, but we do have estimates from MK, and it's just a shade below actually estimates in terms of the top line. 40 crores on the bottom line is pretty much in line. They were expecting about 41 odd crores, but on the revenue front, the expectation was that there would be growth past that 400 crore mark. So actually, yeah, it wouldn't be too bad because it's 392 crores. 77 crores on the EBITDA too looks to be pretty much in line with what they had estimated, and the margins at 19.6 is almost in line with what they had estimated. In terms of what the management has said, they say that the backdrop has been of increased sales from the formulation business and higher revenue from the North American market. The emerging business is taking shape to drive their future business growth. Okay, so that's about it. There's not much else in terms of what their geographical breakup is. We'll try and get Ekta to give us some more details. Let's get back to Pidilite for now. Mr. Parekh, what has been the consumer offtake and the secondary sales growth that you've seen?
See, our primary and secondary sale, by secondary I mean what is sold by our distributor to the retailer, is more or less same, because we work on a replenishment model basis. So there is not a significant difference between our primary and secondary sale. As far as consumer offtake, I don't have an exact idea of the second quarter. That data is not readily or easily available.
Mr. Parekh, we're trying to understand the underlying demand situation. Very simply put, has that improved?
See, as I said, that improvement in our sale probably does mean that there has been some improvement in offtake, but it would be difficult to quantify it.
Okay, so what's your outlook then on the way input costs are shaping up? I mean, how have prices trended so far this year? Also, with the crude prices higher now, do you anticipate having to take any sort of price hikes?
Yes, so crude, there has been a good increase in price of VAM. So there has been an increase in price of VAM and in price of some of the other raw materials. Last 2 years, we were at real bottom of the raw material cycle, and now there has been some firming up of that. So that has had some impact on our gross margin during the first half of the current year.
Mr. Parekh, getting back to the quarter that just went by, your margin expansion this quarter has come on the back of lower other expenses. Any sort of one-off in those numbers?
Now, our other expenses were lower in this quarter due to lower advertising and promotion expenses. This was due to a timing difference. We had lower than normal expenditure in this quarter. But our advertisement is not uniformly divided over the quarter, so sometimes it can go up or down during the quarter. But we expect the advertising and promotion expenses to normalize during the next 2 quarters.
Okay, so what would be that ad spend number as a percentage of your sales?
See, our spend is about between 3.5 to 4% of sales.
United Breweries had a good run. The numbers look very, very good, mind you, but that one is coming for some big profit booking. Take a look at the intraday chart. Well, it's moved to the low point of the day. Granules just came out with its set of numbers. That stock as well is drifting lower as we speak. It's come off close around 4% from the top. So let's pull up the intraday chart over there. But the Nifty as well continues to grind lower. Now we're moving towards that 10,250. The Sensex, by the way, is moving towards that 33,000 odd mark. We're down 105 points. So it's a sharp correction from the top. ONGC, after the recent big run, that's coming for some selling. On that note, though, we'll wrap up on halftime report. You stay with us because Business Lunch